Hello, hello. Welcome, everybody. My name is Stanley from Value Invest Asia. How are you guys? This is actually our first time broadcasting live on YouTube. If you have been following us, you know that typically we try to broadcast from our Facebook page. But over time, we get some feedback from a lot of you guys that maybe some of you might not have, we might not have your Facebook account. So we are just trying to test it out on YouTube to make sure that everyone would have a chance to chat with us, right? So if you can hear me well, give me a shout out. Let me know where are you connecting with us from. I see some of you joining us. Grace, always nice to have you. Ray, not sure if I have spoken to you before, but welcome. And today I just want to spend some time, maybe have a more candid talk with you guys, a more heart-to-heart talk, to share with you guys a little bit about a story of how I got started in investing. I think more than 10 years ago, back in 2006. Some of the mistake that I make along the way, and why I stay in the game for such a long time, almost 13 years now from the first time I bought a stock. And of course, if you guys have any question during this time, feel free to just type it on the comments tab. I would try to check on them very so often, so that we can have an interactive session together. All right. If you guys can have any question, just put it down on the comments tab at any moment of time, and on and off, I'll try to get back to you guys. And just sharing the story of how I got started in investing. Really, I started investing back in 2006. That's when I have just started working for a few years, and really because my work as engineer at the time was my salary was really minimum, and I'm just finding ways that I can accelerate my income. And the stock market seems like the most easy way at that time. And of course, if you remember 2006, that's actually the almost the end of the bull run. And of course, like everybody else, I just got sucked into it, and mainly just because the stock market has been rising for so long. And really, at the beginning, I have to be very honest. I really do not know what I'm doing. I have never really been focused. I'm not someone that is constantly looking at the stock market even when I'm studying. So I am really not exposed to it when I was studying. But it's something that I just jump into after, because I realized that my salary alone is not going to be sufficient for me. And so at the beginning, when I first started investing, the stock that I look at are very, very speculative stock, and stocks that I just hear rumors on, or whatever the brokers is recommending. I remember, because at the time I was still working in Malaysia, so I started investing in the Malaysia market first. And one of the first few stocks that I bought is actually this company called Green Packet. If you guys are familiar with the Malaysia market, you know that Green Packet is one of the newer, at the time at least, one of the newer internet provider of Malaysia. Because in the past, the internet is kind of monopolized by, of course, the Telecom Malaysia with their Streamex, and the service was really bad. And most people would agree that there have to be better alternative. And Green Packet was one of them, where they provide internet through a new technology, a wireless technology called WiMAX. And the market just got very excited over it. They are one of the only 4 licensed provider to provide WiMAX. And I switched my internet to Green Packet at that time as well. And I just got sucked into the story of how they're gonna take over the entire internet space. Of course, at that time, the company is still not profitable. I think until today, this company is not profitable. So this is actually this is the kind of stocks that I started investing in, and of course, but interestingly, because the market was going up, 2006, 2007, I actually make some money from it. And when you make money on a speculative stocks, you feel that you are very smart. You still feel that you do no wrong. And of course, I bought another stock called KNM, which is one of the oil and gas suppliers. But I totally do not understand what their business is. I think until today, I still have not a clear idea what their business is. But just from there, I learned a hard way because I lost money on that stock. And what really happened is I start to realize that this is not the right way to invest. Say, at the time I was 20 plus, it's not the right way to invest for the next 50 years on just being speculative here and there. It's almost like just throwing a dart and hoping that it sticks. So I came to realize that a lot of the previous stock that I bought was just based on luck if I make money, and also based on luck if I lost money. So I really went on a hunt on finding the right strategy for me to have a more how do I say that, have a more structured way of investing, that I can do it over and over and over again over the long term. And this is when I started almost binge reading every investment book that I can find my hands on. I mostly self-taught myself in investment. Of course, I also joined the CFA program, but that was more in hope that I'll find a job in the finance line, because I was trying to switch my career as well. But from investing, I really learned it through just reading every single book that I can get my hands on the library, that I can get my hands on. And today I just want to introduce a few books that I think would be very, very advantage for you guys if you spend some time to go through them, to understand a little bit about, I should just share with you from all the books that I read. Maybe these are some of my favorites, and I really love to share them with you. The first one, of course, I think most of you would have already read it, is actually this book, Intelligent Investor by Benjamin Graham, right? And I guess this is almost like the Bible for investors. Although they don't teach a lot about how you actually go about finding the stocks or investing, the strategy behind it, they don't really go in deep detail about it. But what it really taught is the philosophy behind it, on how you be an investor and the temperament that you must have. And from there, I really learned, we have to be patient when we are investing in the market. And sometimes it's always better to, treat the business that we are investing in from a business point of view. So never really look at the stock price and get excited or get influenced by the stock price. A lot of us, when we invest, the first thing that we tend to check the stock price. Sometimes we look at, if the stock price has been going down for a long time, then we feel that, regression to the mean, the stock should come back up. But over time, I learned, especially from this book, that when we are interested in a company, the stock price should actually be the last thing that we go out and check. So that's something that I learned definitely from Benjamin Graham from this book. If you're looking for something to get started in investing, this is something that you can look at, and also just by rereading it, maybe just clearing your head, especially if you have a volatile few months over the past few months, just to go back to basics and understanding fundamental. That's definitely a great book. From there, I read a number of books, but I think after a few years, I came by this book, which is by Barton Biggs, Wealth, War, and Wisdom. This is actually, until today, still one of my favorite investing book. Again, they don't talk a lot I guess it didn't really talk at all about how to invest and the strategy behind investing, but it show us the long-term trend of stocks compared to all the other asset class that they have. So they talk about the performance of the stock market compared to, say, your gold, your property, your bonds through the last 100 years, through World War One, through World War Two, and different countries. And the conclusion is basically stocks is really still the best source of asset to own for the long term, and it is the asset to own, even if your country is in war, even if your country lost the war, like if you're in Germany, they still turn out to be one of the better asset class to hold on to compared to all the other asset classes. And that's something quite interesting to me when I found out about that, and it really gave me the confident boost that it's okay to hold your wealth in stocks. A lot of us, and I get a lot of feedback or questions from our audience, especially, they say if you keep your wealth in stocks, it's very dangerous, right? Because as the stock go down, your wealth is going down. But in fact, from this book, and at least from my personal experience, if we are holding it for the long term, if we are just finding a place where we want to store our wealth, even if we buy a property, the property prices go up and down as well. And if we just hold it in cash, it's almost 100% certain that we'll lose money over the long term. And stocks still end up, on average, if you're holding it for more than 5 or 10 years, it will still end up being one of the better asset class for you guys to hold on to. So that's really a second book that I really encourage you guys to take a look at. Again, we are seeing more and more people joining us today. Welcome again. I'm Stanley from Value Invest Asia, if you're just joining us. And the structure of how we're going to have our YouTube live today, basically, I just want to share with you guys my journey on how I get started in investing, and some of the tools and practical tools that you can actually use now to maybe improve the efficiency of your research and also streamline the process of how you invest. We talk about that a little bit. But of course, again, if you guys have any question at all, you can just give me on the comments tab, and I'll try to answer as many as I can as we go along. Right? Let me just pull up the YouTube event so I make sure that I can see your comments. Cool. Okay. The next book that I really want to share with you guys is maybe this one, Security Analysis by Ben Graham again. I want to share with you guys, do not get this book. Do not get this book. It's a very, very dry book. It's almost a textbook for security investment. And yes, it teaches a lot about what we call now deep value investing. So how do you actually go about finding net companies and things like that? But I would say it is not that relevant anymore. And a lot of things that they talk about no longer holds true, at least in the market today, or at least for the past 10-20 years. So it's a good book to just have, but it's not that easy to go through. So there's something that maybe you want to give it a skip. Okay. Hi, Alan, how are you? I just saw your message. Hello. Victor, nice to see you again. And Carlok as well. And who else do we have here? Hopefully I can see everybody. My computer is slightly lagging, but I can see everybody. Kalop and Heng Wu. Nice to meet you guys. Right? Yeah, let's go through some of your questions if you have. Alan, you're saying, is it a good time to buy REITs? REITs, I always see it more or less as an income instrument. So I buy it for the yield. I don't worry so much about the price fluctuation. Of course, when we select a REIT, we want to select a REIT with property that we believe that will have long-term appreciative value. So if you look at I don't know, if you look at say a Keppel REIT in Singapore, you want to make sure that the buildings inside Keppel REIT are buildings that you are very optimistic in. Then you know that I guess you feel optimistic that in the long run, this property will appreciate over time. This is what you want to look at. But I would mostly focus on the yield and seeing if it's sustainable in the long term. Right now, I guess S REIT would be, in my opinion, where the most attractive REITs are, with the higher REITs, higher yield, but also high quality asset as well. So most of the S REIT I'm quite happy with, like at least those with property inside Singapore, because I'm still very optimistic about property in Singapore, and I don't think they, have a long-term chance of depreciating in value. And I definitely think that these are, if you're looking at REIT, S REIT is a good way for you to start looking at, and especially just if you're new to it, try to look at more of the bigger names and more established names, especially some that have a longer track record, rather than those new IPO without a strong sponsor. That I will be more worried about, right? Okay, and Carlock is asking, do I use any technical analysis indicator? No. So I have always been quite a pure fundamental investor, and I have never really used any technical analysis before. But I don't know if I have accidentally used it. Like, sometimes looking at the price charts and just have my own feeling about it. I don't know if that counts. But so far no. And why I never spend the time to really understand and learn more about technical analysis. I'm sure there's benefit of it somewhere, but I just feel that if I'm a long-term investor and I'm just holding it for the long term, I would want. I would be more focused on the fundamental of the business or of the REIT, of the trust, rather than what the technical indicators will do over the short term. And I have realized that a lot of people would try to mix them together, maybe looking at fundamentals and also using technical data. In a way, I feel that sometimes it might even confuse you a little bit too much, especially when they give you, different signal. To me, I just want to keep everything as simple as possible, as if time efficient as possible, which is why I guess you can call me a purist in that sense. Okay. Okay. Let's go on to some of a few other books that I'm very interested in. This one I learned a lot from by Pat Dorsey, which is a 5 rule for successful stock investing. And this is definitely one of my favorite stock book as well. So it's by Pat Dorsey, who is the director in Morningstar. And they basically go through a very practical way on how do you look at different sector of stocks and some of the strategy that you can use. Of course, it is more US centric, so you might have to translate that to Asia stocks if you're more focused in investing here. But definitely a great book to read. Okay, and next one, now we are diving more into things that is more practical to make practical advice from the books that they teach, and give us a better sense of how do you actually go about investing. And one book that I really learned how to get started in investing is this one called The Warren Buffett Way, by Robert Hagstrom. I love this book. They put it down very, very simply. Simply that, in investing, in fundamentally, you look at 4 key stuff when you're analyzing a company, and just based on this 4 simple factor, you can basically look at all the other different type of businesses. But of course, how you analyze them, it comes with experience, but definitely a great book to get started on. And if you are already, after you read that book, a follow-up book will be another of Robert Hagstrom book, which is the Warren Buffett portfolio. And this one, he talks more about how do you manage a portfolio, in a sense. How do you manage the portfolio, and how do you size different position? That's something for you to look at as well. And I guess it's a little bit advanced. So if you're just starting out, I wouldn't start with that book. But if you're along the further along the way, where you have a sizable portfolio, or at least a more diversified portfolio, and they're thinking about sizing and how do you manage that, that's a great book for you guys to look at. And of course, lastly, shameless plug again. Our own book, in a way, but honestly, in a way, because of all the books that I read, we found that there's a lot of books that just use US books as US stocks as a base, and a lot of times the stocks in the US has very different, I guess, behavioral and maybe corporate governance and behind the structure of the company, very different from Asian stocks. But more and more people are beginning to be very interested in Asian stocks, and myself included, is mostly invested in Asia stocks or in companies that have huge exposure in Asia, which is why me and my co-founder Man Hong penned this book, mainly to collect all the thoughts that we have found and learned over the years, but put it in a Asia context. For all of you guys to get started. So definitely, get that book as well. Okay. Okay. I got a few more questions from you guys. I got I got KWNB. Everything is at all-time high these days. S&P, even S-REIT are breaking records higher and longer. Seems the stock are overpriced. What should the investor do then? Yeah, if you ask me, I'm not a great predictor of where the market is going. I'll share you a story. In fact, 2-3 years ago, I already feel the S&P is a bit high. But luckily, I didn't sell off my share, because since 2 years until today, the stock market basically rallied about 50%. And if I was not invested during this time, my portfolio would have missed out on that rally. But I would urge you to not look at stock maybe in the next 6 months or 3 months, but rather look at it in the next 5 years, 10 years down the road. And if we are investing in very high quality business, I would assume, I am quite optimistic that over the longer term, they will still come out on top. Even for a company that say, not growing much, but if they are already very established in the market, they will at least grow with inflation. And that's something for us to think about, because if we are just holding, if you don't invest, what do you do with the money? You just hold it in cash. I will guarantee you in 10 years time, that money in your bank would not be worth as much as it is today. And if we invest in the stock market, at least we have a chance that it will be higher. But definitely, if you're just having short-term cash that you need in the next, I guess, 6 months to 1 year, this pool of money is not to be invested in the stock market. Stock market, although the prices and the stock prices move up and down every single day, it gives us it gives us the impression that it is a place for us to get quick money in, but in fact, it is a place for us to sort out long-term wealth. So that's something for you to think about as well. Even in today's market, I'm still investing, but NB, just the way I protect myself from my risk is I stick to the higher quality ones. So they may be stock that more high growth and more exciting in story, but this is the time, if I feel the market is high, this is the time I try to avoid those kind of stock. But the main bulk of my portfolio will be geared towards a very, very high quality, almost blue chip type of stocks. So that's how I protect myself in my portfolio. Rather than not investing at all, I just go towards quality more, right? Thanks for the question. That's pretty good. Raj Kumar, hey, thanks for joining us. Do you mind providing the names of the book recommended? I think I went through that just now. But after the end, I'll put down the link on the show notes. So the link to all these books that I talk about, I'll put it down on the show notes so you can take a look at them. Definitely, I'll link you guys up. NB, I just bought your book from Kino. Thank you very much. But is it true or just perception that Chinese stocks are underpriced now? Simply put it, if we put 10K now, would this go into S&P 500 or the Vanguard Total China ETF? Why? If you ask me, if I only have these two, I will split it up, I have a diversified portfolio. Personally, I own close to 50 stocks in my portfolio. That's not a number I recommend you guys. I think anywhere from 15 to 30 in the long run, like right at the end, when you have a portfolio of 15 to 30, that's actually pretty good. But I always believe in diversification, diversify. Mainly because we are not professional investor. Although I do it for a living, I still don't compare myself as a professional investor because I don't spend day and night thinking about it. I'm not obsessed of it, and I'm sure most of you would have a life outside of investing. So for us, if we treat investing as a part-time job, we have to manage our risks, which is why we shouldn't bet overly excessive in just one stock. And in recent months, we have seen that can be very dangerous. So I always believe in diversification. The US stock market is something that we can never ignore totally, because just some of the best companies are there, even though they may not be located in the US, but some of the better companies will still gear towards going to the US to list. So it's a market that we cannot really avoid. But the China market is up and coming. The issue with A shares and I guess B shares in Shenzhen is really the lack of the new economy type of businesses. So you see all the tech companies, even Chinese tech company, none of the tech company is listed in the A shares or B shares. They're either listed in Hong Kong or in the US. This has to do with the structure of the A share market itself. They are reforming it. But until then, you will see A share, B shares mostly on the old economy, the hard economy type of businesses. So they might not have super high growth, but if you're still looking for decent high quality ones, that you can find some there. And buying the ETF is a great exposure. Definitely, I think you should consider it as well. Hello, Link from JB. Hi, how are you? Aren't ETF diversified? Yeah. Okay. Follow up on your question. Aren't ETF diversified? Yes. But if you're talking about if you should invest in the US or in China, for me, I am about 30% invested in the US market and the rest in Asia. So that's something to think about. Okay. I also want to share with you guys some of the tools that I use when I'm investing. So before I forget about that, so let me just share with you some, share with you my screen. If you can look, when I first started investing, to find the stock that I want to find, during my work, of course, in the past, I have access to Bloomberg and also to, say, Capital IQ and things like that. But if you ask me for a free option that still give relatively good results, this is the one, Financial Times Screener. If you just Google Financial Times Screener, you'll come to this page. And after using some of the free screener out, I think this is one of the better ones. I don't use it now, that often. But when I was first started to invest, this is actually a good place to hunt for stocks when you are starting out. So I just give an example here, right? I can choose a company, from countries that I want to invest in. This one I selected Hong Kong. Sector, if you want to break it down to sector, the ratios that you are interested in. I'm looking for stock market cap of above 1 billion with a dividend yield of say 4 to 8%. And when I screen it, I get about 300 plus results from the Hong Kong stock market. So this is a good simple way to get started in screening for stocks, and they allow you to just rearrange it based on whatever you want. If I arrange it from market cap, you can see some of the banks are yielding about 5% to us. And that can be the starting point when you're looking for stocks. So definitely check this one out. And when I'm looking for investment data, I typically go to Morningstar. I use other services as well, but when I'm just looking at a quick glance of some of the financials, I want to understand, say how much the stock price is, what's the market cap right now. Say this is the one I have for 10 cents right now. Morningstar is the one that I go. The free version gives you about 5 years worth of data. Sometimes it's not very accurate, but it's pretty okay. It's pretty okay. And for most stock, you'll find that it's quite sufficient. But of course, if you want better data, it's always better to check it back on the annual report. If you're very interested in Hong Kong stocks, which I mainly invest in, I go to this stock called aastocks.com. They have a mobile app as well. And similar to Morningstar, they share with us, the things that like dividend. We can find out the financials. If and you're interested in technical stuff, they provide technical stuff as well. You can check that out. And I like this part where they help us analyze it compared to its peers. They'll give you, say, either the valuation or the dividend yield right now, and compared to all the other stocks on, say, the Hong Kong exchange or its peers, and you can see whether this stocks is relatively overvalued or undervalued. That's something quite good for us to check it out. Other tools that I use, I have a note-taking system that I use. Generally, when I come across a company, I will put it down in my notes. I used to use a physical book to write it down, but then after a while, I find it very hard to search back what I have wrote before. So now I mainly use two notebook. Either Evernote, if you have heard of it, is pretty good note taking things to write down. You can see this is some of my pages. I use it for other things as well. I'm sort of learning some basics programming now on Python, so I wrote it down as well. But recently I migrated to Microsoft OneNote, and it's pretty good. So you can see this is actually a page that I'm doing. I'm currently researching on NVIDIA, and they allow me to embed YouTube videos, even PDF. I can embed the whole PDF inside, and I can, jump around and just add notes to it, say on a mind map basis. And I find it quite useful for me. And definitely now all my notes is here. Every time I find a new company, I'll open a new file or a new page for it. And so I can go back and see all the notes that I have taken on this company. And when I research on a company, I don't buy it straight away, right? Sometimes I follow a company for a very, very long time. I can follow it for anything from a few months to even a few years. I followed, say, 10 cents for about 2 years before I actually bought anything in the company. And this is a great way to keep track on your research on an ongoing basis. So that's definitely a tool that I strongly recommend you guys. You can check it out. Hopefully that helps you guys in your research and in your improving your efficiency of your stock process. And Carl, what are the website that you use to analyze stock? Okay, I guess I just answered that question for you. And you also asked a question, what is my opinion on the India market? What sector should we look at in the India market? I have to be very honest. I don't really understand the Indian market that well. I haven't really studied um, in detail, but definitely, just looking at the macro environment is a fast growing economy, and it will definitely become one of the stronger stock market in the world in the future. I just don't know how to access it yet. I don't know how to pick stock in it yet. And if you ask me if I really want to invest in the Indian stock market, I would really go the way of ETF. There's something to look at. Similarly, in different sectors. So I myself is very weak in say healthcare sector, and if you ask me to invest directly in the healthcare sector, I might just look at some healthcare ETF, where I don't have to worry too much on stock picking, on which stock to own in the healthcare system, but rather just have ETF that buys all the great pharmaceutical company or hospitals around the world. That might be a strategy for you guys to think about as well. Victor, you're asking, do you look at any economic indicators in your investment decision? Are you more bottoms up or top down? I guess there's a mixture. I used to be very bottom up, but I realize more and more in recent years, I tend to look from a top down perspective now. So, in a way, I can give you an example. I look at, say, a Chinese stock. I will look at the Chinese economy first. Is this something that I think that will continue to grow in the long term? Which sector do I think will continue to grow in the long term? And then from there, I pick some of the bigger companies around there. Because every time I'm going into a new sector, I try to pick some of the more established company first, rather than going into the more risky ones. So as a rule of thumb, I always go for the more established company first, and then when I'm comfortable with the sector, maybe I'll stock pick for some of the smaller but higher potential company within that space. That's just a personal preference and personal strategy, but of course you can have a different strategy as well. Grace is asking, during the first few years of your investment journey, say the first 3 years, did you make a yearly profit or break even or loss? uh, for the first 3 years, so I started in 2006, and by 3 years' time, it is 2009, at the bottom of the financial crisis. So I'll let you guess whether I'm making a gain or loss after the first 3 years. Okay. Raj is asking, what do you think about the Naga? Monopoly in Malaysia, exposure to energy sector, moving into sustainable. Yeah, I guess the Naga National is a pretty decent stock that I don't own them personally, but I would say they're quite a decent stock. But the problem I wouldn't say problem, but something you have to be aware is, oh yes, they are a monopoly, but they are also a regulated monopoly. So they would never be able to earn outsized return. They would earn a relatively stable return, but you may argue from the new government is more, I guess, socialist in nature. They might even push the Naga profit down even more in the future. We don't know yet, but from the way we look at it, the current government is definitely, I guess, more to the left than previously. So there might be change in the regulation. So regulation and the government are always a big risk for TNB. NB asking millionaire teacher. I'm sorry, I don't know who that is, but okay, millionaire teacher claims that emerging market tends to underperform relative to developed market. What's your take? Okay. I think that you have to, look at. You have to look at it. I don't look at it completely just emerging market or developed market, because a lot of the developed market stock are very exposed to developing economy as well. Say even for Apple, a big part of their sales actually coming from China. So I don't look at it that way. I rather look at the stock basis and where is their growth exposed to, where is the business exposed to. As a general rule of thumb, of course, I will gear towards more established and more high quality companies, especially when you're first starting out. I would say close to 70, 80%, 70 plus percent of my stock portfolio are almost large cap companies. And maybe from after that, you will take some risks and going after some of the smaller or maybe more emerging market type of companies, with limited exposure. So, if something bad happened, you don't lose your pants. That's something to think about. Jack Hua, I hope I pronounced the name correctly. Hello, glad you can join us. Welcome. So that's some of the things I want to share with you guys. And before I go, I just want to let you guys know as well. If you have been following us, you know that our grand webinar is actually happening tomorrow. And I just hope that I can share with you guys maybe 5 minutes of my time on what's happening on the grand webinar, and just go through the detail with you guys, just in case it is something you're still considering or thinking about. A lot of the question I get about the grand webinar is, what if I cannot attend it? And don't worry, it's actually a recorded session. So we're gonna have a 2 days event, Saturday and Sunday, and we're gonna have 4 webinar session each. 4 webinar session in total. So 2 webinar session for every day. That's a total of 8 hours of webinar content. We're gonna publish it live, but fully recorded. So even if you cannot attend it, you can still continue to view it. We have a dedicated website for it, where you can continue to go to that, and we have a Q&A section where you continue to engage us and ask us questions if you have follow-up question on the things that we go through during that event. And during the event, we are going to publish, mostly talk about the 10 stocks that we featured in our stock guide 2019. You know that every year we publish a stock guide, which is basically the 10 stock that we are most optimistic about for that year. And this year we have 10 very high quality companies that we feel that has room to grow for the very long term, and they are listed in from the US to Hong Kong market, to China, Asia's market, to Singapore, and even Malaysia. So we have something for everybody. And why we create this service and this webinar is mainly because, going back to at the beginning when I talk about when I first started investing, one of the key problem that I have is really to find how do we go about finding opportunity in the market. Say just in Singapore market, we have like 700 companies. Malaysia, you have like more than 1,000 companies. But you, as a portfolio, you only need about 15 to 30. How do we go about finding all these companies? And our grand webinar and our stock guide is really designed to help investor like yourself who is doing it part-time and don't really have the time to search out all the stock one by one. We hope that we have done all the research for you, and this can be your starting watch list stock for you to get started and look at. That's really the motivation behind why we started the stock guide and the grand webinar. And if you're joining us, thank you again. If you're joining us tomorrow, we actually start at 10 o'clock. And we have the presentation on 2 companies first, and then we will go through a short workshop as well on how do we actually go about selecting long-term winners. And we go through the key checklist on how we actually select all these 10 stocks. So instead of just giving you the fish, we're gonna teach you how to fish as well. We go through with you how do you actually go about selecting these 10 companies for yourself in the future. Afternoon session, again, another 3 stocks in the stock guide, and also a workshop talking about portfolio management. This is a personal strategy that I'm using called active indexing, and what it means and how do I manage it for myself. And I one of the key points of how I manage my portfolio is really on not not focusing on the total return that I can get in the market, but rather on the most time effective way to manage a portfolio. So I don't spend a lot of time managing my portfolio, and I design it in such a way that I can do the least amount of work for a relatively stable return in the long term, right? That's something we will share with you. And also Sunday, we again have a stock guide discussion, and we have a special guest talking about more about dividend investing. I think dividend investing is something that a lot of us is very interested in, but might not be very sure how to go about doing it. And we have a special guest, my co-founder Willie, who we call our dividend expert in our team, because he really built his portfolio from ground up, right, by using mostly dividend stocks. And he's going to share with us how do you balance out, looking at dividend stock with good yield, but also avoiding the pitfalls and the red flags within this company. So this is something that he will share with you guys. And we will end the whole thing off in the afternoon session with a very special panel discussion with our founders team. So all three of us, myself, Willie, and my co-writer Manhong, will be here, where we just have a free for all, talking about how our story of getting started in investing within the stock guide. Which one is our favorite, which one is our least favorite, and why. We have a debate over it, and of course, just chatting with all the participants and answering all your questions that you might have during that. So that's all our full features of Grand Webinar. You get a stock guide where we have 10 reports in it, 8 hours total of webinar fully recorded, live chat with our team, and also will be your personal, stock analyst for the next 3 months support that you will get regarding the stock guide 2019. If you need follow-up information on that within the next 3 months, if you need, to chat with us or follow-up questions you might have, there's still a question and answer section in the website that you can reach out to us directly. And because we have been doing Grand Webinar for a few years now, this year when you join us in our Grand Webinar tomorrow, you actually get our stock guide 2017 and our stock guide 2018. So in total, you get 30 stock reports for the past 3 years. And a lot of the stocks that we featured in 2017 is still quite relevant today, mainly because of our selection process. We look for companies that have long-term growth prospect. Of course, I have to be very honest and upfront with you. We don't always get it right. In stock investing, we will never be 100% right, which is why we diversify, because as a basket, we want our portfolio to do well, and it's not every 100% of our stock will do well in the long term. But there's 30 report for you guys on top of what we'll discuss tomorrow. And all this actually just at a very affordable price of just $150. So if you think about it, for 30 stocks, that's actually just a cup of coffee for every report. Hopefully you can support us to make sure that we have the resources to continue to give you great content and provide you great research year after year, and always here to support you going forward in your own investment journey. Hopefully that we can have your support, and so that we can continue to do this more often, and also for the longer term, right? If you're still interested in this event, you can just go to this link. I'll share with you guys the link as well. But do note that today is actually the last day of our registration. We have to close it by midnight tonight, just to have all the numbers ready and prepare all the links that we will send out, and all the website will update it for our participant. For this event, we have a limited number because we want to make sure we can service every single one of you if you have a question. So we actually have only 10 tickets left right now. And so if you are really looking into it and thinking about it, do head out to the website and register and grab your seat by tonight. If you have any questions, you can definitely reach out to us through private messaging. You can message us on Facebook Messenger. Just find us on Value Invest Asia, or on WhatsApp. You can WhatsApp our helpline at this number as well, right? We also do get some question that some of you might be interested in, if you have heard of our VIA Club. So the Grand Webinar is a separate services from VIA Club. But if you are not a member yet, but you're thinking about joining our VIA Club as well, you can actually reach out to us privately through Facebook Messenger or our WhatsApp, and we might even we might help you in maybe come up with either a package for you guys combining the Grand Webinar and your VIA Club membership. If that's something that you are interested in, definitely we can help you design one, right? Okay, so thank you so much for your time. I think before we go, let's have a last few questions that you guys have, just to make sure that I didn't miss out on some of your question. I think Jin Lun is asking, do you have any fund managers or news feed that you subscribe to for generating investment insight? Fund managers, some of the fund managers I follow, definitely, of course, Warren Buffett, and this fund manager called Howard Marks. If you search him out, he's the chairman of Oaktree Capital, and he has great memo that he publish. I guess not on a regular basis, but maybe every few months he'll talk about it on the macro environment. That's something I listen to greatly, and definitely something that I follow as well. As for fund managers that what kind of stocks that they are investing in, generally I don't follow that, mainly because sometimes their strategy is a bit different from mine. So I tend to still just stick to my own preference and my own strategy of investing. Right. So hopefully that helped you guys. Again, thank you so much for your time. Wow, I didn't even realize we have been chatting already for an hour. I understand that it is Friday night, and I'm so grateful for all of you for spending the time with me on a Friday night. Definitely have a great weekend ahead. And hopefully I'll see you guys at the Grand Webinar if you're looking at it. Cheers, guys.